Okay, turn the music down. All right. All right, good morning, Commodities. How are you? Welcome to Forex.Today, the YouTube community of more than 250,000 foreign exchange traders. Nah, just 20. Just 20. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. Let me know how I can help. We'll go through the charts today. So obviously we're going to do technical analysis. We can do long term, medium term, short term. Let me know what you are working on. We could talk about fundamentals like macroeconomics or analyze, let's say, domestic economic data. Look for trends there. Just let me know. There's, I think, somewhere between 5,000 and 6,000 videos associated with my work on YouTube. Those are all free. Feel free to watch them. If you go to youtube.com/FXBootcamp, there's a free training course there. I think there's a link in the description below. Is it there? I don't know. But there is a link to fxbootcamp.com. It's a community of foreign exchange traders, and you need to join today. Now, it's cheap, but it provides a lot of value. So you're missing out if you're not a member. You can buy my book, or not my book, the book I wrote, which is owned by Wiley Publishing. That's also another way to get resources. You should join tradersway.com. They're a foreign exchange, boutique foreign exchange broker. I trust them. I like them. I appreciate them. I believe they're a good business with a good model. I believe they do what they say they're going to do, which I think in this world is actually unique. So check them out. See if you want to use them. But I recommend them. So maybe that's where your relationship with them starts. Tradersway.com. Hey, good morning, Johnny. All right, so what's the big news over the last few hours? The last 12 hours. Why is dollar down? Dollar down. Dollar down. Why the dollar down? By the way, could you please answer the poll? What are you trading today? Risk on, risk off, crosses? And if you don't even understand the potential of the three answers, then you're missing, there's a void in your trading. Those are really the only three things to trade. Risk on, risk off, or crosses. Which is a fancy way of saying up, down, or sideways. Okay. So, for those that said risk on, you are correct. The data out of China was extraordinary. Some of the fastest growth percentage-wise in China, or change in growth in China, in decades. So, what you might want to focus on today is potentially a China reopening play. It's the first real catalyst of putting that narrative together. Okay. Now, dollar down is risk on. Is it risk on in the sense that the United States stock market's going to rally today? Maybe. But it could be just risk on in other measures. But I would assume the stock market would rally off of that. But remember, when you assume, you make an ass of you and me. But nonetheless, we have to kind of go through that. US dollar down is going to be a risk on play, but CAD is down. Swissy and yen down is risk on. So, there's definitely some risk on component here. Pound is giving back, but remember, I never swallowed the hook on pound. But maybe, really, if you're going to translate this, you're probably going to say things like dollar down, Aussie up. Dollar down, Kiwi up. Dollar down, gold up. Dollar down, oil up. I'm out of my gold trade. I took profit on that. I'm out of my palladium trade. I took profit on that. And I took profit on my euro dollar trade. Remember that I locked in 100 pips on that. So over the last 2 weeks, I don't know, well over 1,000 pips. I don't know, 1,500 pips or something. And then remember the euro dollar was a hedge, and a hedge on US dollar strength. In this case, the weakness showed up, so I got out of the euro dollar short for a profit. But I'm on my USD Mexican peso, I want dollar weakness. That's the play I'm making. It's not really the play I'm making. I'm collecting yield. It's a carry trade, but that benefits me. But we'll take a look at that because now I've run into some problems there as well. So I might have to, clear the books, so to speak. And it's a decision that will need to be made soon. So we'll take a look at that. So let's start with the stock markets, and then we will look at things like gold, oil, and Bitcoin. And then we'll do dollar pair, yen pair. What do you stink? Smell like a plan? Okay. And what do you think? Does this have anything to do you think, with good news out of China? Do you think the Australian stock market would rally on such information? Yep. Yeah. Yeah, that's exactly right. That's exactly it. So that could be legit. That's what I'm telling you. Excuse me, my throat is just... Nope. Too much ghee. So we didn't have no China reopening, no China reopening, no China reopening, no China reopening, no China reopening. Now we have a China reopening play with that has now created a double bottom. And if we're breaching this channel, do you know what the target is? Okay. 7,600. 7,600 is the target. You understand that? On House's, hey Wayne, when I listen to other online people, they're predicting doom and gloom scenarios for the economy. Well, it's a risk. Okay, how do you navigate these troubled waters? Well, if you feel like I, give you more of a balanced approach, then keep coming and keep listening, right? But look, is there potential for risk to the downside in the market? Yes. So what about doom and gloom? Well, doom and gloom, I don't have doom and gloom. I just have to make decisions. I mean, it's a great question on how, so, and I hope everybody's listening. It doesn't really matter to me. So it's not a freak out end of the world situation. I'm first and foremost a foreign exchange trader. It doesn't matter to me. Now, if I was a stock market trader, okay, yeah, it matters because it's very complicated to short. So the stock market's typically long-term long or long only. And so if we were going to have another 20% down, this would be very troubling. I don't really care. In fact, I love down markets because as a foreign exchange trader, I should make the same amount of money. Do I care if it's up or down? No, I'm a trend trader. I don't really care. Whether I'm buying dollars or selling dollars, do I really care? No. But honestly, if there's a disaster of an economy, this doom and gloom on how that you might be talking about, that's actually where I make a lot of money. I did very well in the 2008 financial crisis. Very, very well. I built a golf course in my backyard and called it the Pound Yen. That's actually when you do really well. And in particular, when it's relative to other traders. So for example, if you look at all the different hedge funds, and there's dozens of different categories, most hedge funds last year lost money because the market was down 20%. But a macro fund like a Forex fund, they were up about 20%. Up 20%. Now, the interesting thing about what we do, guys and gals, ladies and germs, is that when the stock market is up 20%, we're probably still up 20%. When the market's down 20%, well, we're up 20%. So who cares? You see, like, I don't really care if it's, so there's no doom and gloom here. But in my retirement account, which is, based on the stock market, I'm 20% cash. I'm 15% short. I'm literally short. And that short position is leveraged 3 to 1. Okay. So it's almost like if I'm worried about doom and gloom, then I've already developed a strategy based on that. And for the stock market is try to be as little exposed as possible. One of the things I'm looking at now, and I almost made the investment yesterday, is investing into a covered call strategy so that I own a portfolio of stocks and then write options against them so that I can collect an income stream. So if the market is moving sideways or down, I'm earning money on that. In a weird way, I'm hedged. I'm earning cash flow. And then that makes sense if you think the stock market's going to be sideways or down for a while, a couple of years, let's say. Now, if you think the stock market's going to be rallying for 20 or 30, or let's say up this year 20%, then you wouldn't want a strategy like that because you're limiting your upside because you'd be losing money on those options that you're writing. So that wouldn't make sense. So you see, so again, to answer your question again, Angel, that many others are talking about doom and gloom. To me, it's just, you're supposed to make money in all market conditions. So if we see the potential risk to the downside, I just have to change my strategy, but I'm going to make money. So it's relevant to me to recognize that the risk has changed, the narrative has changed, and I simply adapt. But that's what professionals do, right? So I'm like, it only matters that I have to adjust. But doom and gloom, it's just reality. It would be doom and gloom if I didn't have the ability to do something about it. You see? But I don't have that feeling. And that's why you don't get it from me, perhaps. And I'm glad you don't get that from me, because I look at it as just the market conditions in which I need to make money. So how do I respond to a negative potential market? Okay? But the down markets, everybody, you really should understand this. The way that wealthy people, like people that make big money, what they do is they wait. Essentially, the 10 to 12 good years where the stock market is doing well and the real estate market is doing well and the bond market's doing well, like you're in the good years, the positive growth years. What you're doing is you're only preparing for the bad years. Now, most people just suffer during the bad years, right? I think those that make a lot of money, the smart money, so to speak, they're only using the good years to prepare. They spend a lot of time trying to figure out when the good times are going to end, and you need to be good at that. So you're one of the first to go to cash, because you know the greatest, best, most profitable opportunities by far, vastly outsizing the good times, are the bad times. So imagine you're buying houses for half price and you're getting cars for nearly free, and people are selling their Rolexes cheap so that they can pay their rent. Well, that's when you buy a bunch of Rolexes. When houses are half price, that's when you buy your house. When nobody can get a mortgage because the market's frozen, well, you got all this cash. So you're buying things cheap. And if you go back and you look at that, where if you only bought the stock market every time it dropped, let's say 20% or more, that's the only time you bought, that's when everyone is selling. You understand that idea? If you only bought then, that's when you make a lot of money. Now, if you're the other type where you just sort of buy like a mutual fund, right? Like your 401k, you just buy a little every month. Actually, on the long run, you don't actually do that well. You do okay, but you actually don't do well. If you skip the moments of like buying the dips, okay, you actually lose money. So you might even design your philosophy of get ready for the downturn because it's awesome. But I certainly don't. Barry, what's your definition of doom and gloom? I don't see, again, me personally, I don't really have one because I have the opportunity to address all market conditions being a Forex trader and understanding that, so then I can carry that out. So like I said, if I thought this year was going to be, let's say, somewhat down, but mostly sideways, and I'm like, well, I'm going to put money into a covered call hedge fund, or a fund, or some form of structure that will, right, let's say, limit my upside, but give me an opportunity to do well on the downside. Well, what does that mean? What does that by definition mean? I don't think it's going to go up, so I can limit my upside. Who cares? But if I can lower the volatility by earning money. If my cash position falls, I'm earning money on the option position. So now I'm hedged. So imagine the stock market moves sideways this year, but I make 10%. And you're like, why? Because I picked the right stock? No, because a firm like that, a fund like that, a structure like that, so the one I'm talking about owns 108 different stock. So I didn't pick the right stock. I'm basically an index because I own 108 stocks in that position, but I'm writing options against them, and the options only do well in sideways to down markets. So I'm just simply making the decision that the market's not going to go up. So what am I going to do with my money? Doom and gloom. I'm like, what doom and gloom? I'm a Stoic. I'm a Buddhist. I'm a Buddhist monk, right? I'm Marcus Aurelius. I'm like, I don't complain about it. I'm like, but I do something about it. So the doom and gloom, I think, comes from other people where they're like, it's the end of the world. The sky's falling. And I'm like, cool, sell the sky. Okay, cool, the sky's falling, good. Sell some sky, baby. Okay, so luckily, as foreign exchange traders and as futures traders, we can do something about it. It just changes the strategy. Frank said, did I buy and hold it? No, I did not. All right, so anywho, getting back to this, if there is now a risk on narrative, okay, then this is your play now, right? This is what your play is going to be. And your target eventually is going to be here by April 1st or sooner. Oh, thank you, Neri. Yeah, okay, thank you, Lucas. Yeah. And honestly, guys, going back to that conversation, you're expected to we are an absolute return organization, fund, industry. As a Forex trader, you are expected to make money in all markets. An absolute return fund. And in particular, as I was saying, we do the best when others are choking on their own blood. When things are good, our funds might even lag. Some hedge funds might be up 30 or 40, 50% because, well, they probably are doing dumb things. But an idiot can make money in an up market. And so when you throw down leverage in high risk strategies in an up market when everything's rising, shoot, you might actually get lucky and it works out. So those firms are going to look really good. And they're going to say to you, Lucas, you're only up 25%. How come you're not up 90%? Well, the reason you're not up 90%, Lucas, is you're the better trader. And it's very difficult for investors to understand this, yet alone traders, but investors very often don't understand this concept. They look at the return and they're like, oh my God, look at this guy. He's up 90%. So what happens 5 years later is that trader that was up 90% has now blown up the trading account and they're gone. And the investor has lost money. Meanwhile, Lucas has another year and he's only up 18% this year. And the other fund went to zero. They lost 100%. right? Or they lost 50%, or they lost 30%. Meanwhile, generally it's going to be about the same. And so in that scenario, you look amazing in the down years because A, you're consistent in your returns, but B, you're making money in a down market where real estate's losing, bonds are losing, stocks are losing, right? That kind of stuff. Everybody's losing and you're still chugging away. But that's our job. You have to understand that in our business, you don't say, well, the S&P 500 is down 20% and I'm only down 10%. So therefore, I beat the index. I beat the benchmark. And the market's down 20. So therefore, you're not set. Okay. So we have day trading Tuesday, stop looking correct session Tuesday. So as a swing trader, you should have access to this. That's what it is. Okay, if you didn't see that, you should see it now. Thursday. Yeah, the videos. I don't think it says that the connection is excellent, so I don't know why YouTube is struggling. Right? So you're saying day trading is not properly? The only internet providers, but if I switched, I don't know if it's going to drop on us. Yeah, well, I guess it's YouTube. So, all right, I guess I'll just end it today.